Hello and welcome to this Forex Preview at XM.com. We'll be discussing the upcoming U.S. employment report and the potential reaction in the dollar. I'm Maria Pachurdeves, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, recently some encouraging data has shown the strength of the U.S. economy and stubborn inflationary pressures. Can you tell us how this has impacted market pricing of the Fed's rate path and how the upcoming employment report might impact what Fed officials decide to do in June?
Certainly. Hello, Maria. So you hit it right on the head. We've seen a streak of encouraging data releases lately from the United States. That has essentially confirmed in the eyes of investors that the Fed is not done raising interest rates. So specifically what we've seen is the latest business surveys suggested that the labor market is still pretty strong, economic growth is fine, and very importantly, that inflationary pressures are actually quite persistent. So in the aftermath of this data, investors started to price in a final rate increase from the Fed this summer, either in June or in July. And also, importantly, investors have priced out the rate cuts that were expected in the second half of this year. So to simplify that, concerns that the recession is imminent have faded. And because of that, the markets think the Fed is going to raise interest rates one final time in the summer and then keep them high for a longer period of time. So a higher for longer scenario for interest rates. And that has helped to revive the dollar. Now the question is whether Fed officials truly want to raise interest rates this summer. So the comments that we've seen, investors are betting on a final rate increase, but the comments we've seen from the Fed have been a little bit mixed. Some officials want to raise interest rates, others want to wait and see what happens with the economy, and some others just haven't made up their mind and they want to examine incoming data. So that puts a lot of emphasis on the upcoming employment report. The forecasts point to another solid report overall. Non-farm payrolls at almost 200,000. The unemployment rate is expected to tick up, but just a little bit, and it would remain very close to 5-decade lows. And wage growth is expected unchanged at 4.4%. Now, I think that there's some scope for a stronger than expected employment report. So non-farm payrolls, funnily enough, Maria, non-farm payrolls have exceeded estimates 12 times in the last 13 months. So it seems like economists are constantly underestimating the strength of the US labor market. And I think that this phenomenon could repeat this time because, well, the latest business surveys basically highlighted a very strong labor market. They said that employment growth was the strongest for 10 months in May. So overall, I see the prospect of a stronger than expected employment report. If that's the case, that could solidify expectations that the Fed is going to raise interest rates in the summer and that it won't cut interest rates anytime soon.
So keeping all this in mind, what's the outlook for the dollar in the short and longer term?
Definitely. So I'm positive on the dollar. And the reason is, well, this week I think we're going to get an employment report that is quite encouraging. But further out, Maria, well, it really comes down to economic divergence. So the United States economy is looking pretty decent at this point. The markets are thinking the Fed is going to keep interest rates high for a longer period. But over in Europe, that has started to change. So the Eurozone economy seems to be slowing down. Germany is in a technical recession. Inflation in Europe seems to be cooling finally. So that makes market pricing for the ECB to continue raising interest rates this summer a little bit unrealistic. I think that the European Central Bank might under-deliver. The markets think that the ECB is going to raise interest rates another 2 times this summer. I think there is scope for disappointment there, and therefore I see scope both for a stronger dollar and for a slightly weaker euro. Now, from a chart perspective, Maria, I think the line in the sand for euro dollar is the 105.20 region. If we see the pair move below that level, that would signal the longer term uptrend is no longer in play, and that could open the door for further declines.
Marios, thanks so much. And thanks for joining us for this Forex Preview at XM.com.